Today is Wednesday, December the 1st, and this is going to be a really short video because the market is really in trouble, and it's COVID, Omicron, it's the Fed wanting to pull back and possibly raise rates, and their hawkish statement now moving it up to second quarter of next year. Who knows, they may get more hawkish at their December meeting, and it's inflation, and it's so many other things that are going wrong. But look at the McClellan oscillator. It is as oversold as we have ever seen. And what we've seen in the last 3 days is buy the dip and sell the rip. Monday, Tuesday, and Wednesday, the market moved up, ripped, people bought it, and then they sold. So, they bought on the dip, the market ripped up, and they sold on the rip. And you were looking at, making these great numbers by 9:30, 10 o'clock in the morning, but by noon they were all gone. Now Monday we had a bit of a rebound. The afternoon wasn't so bad, but Tuesday and Wednesday, not so much. So we've got this major oversold, and the summation index, don't have to tell you, it's just off the charts low. Now look at the Dow Jones. The last time we talked, the Dow Jones had this touch right back here on the 200. Now we said, now that could be a reason for a bounce, but there were other reasons in the other indices where we didn't think that that was going to happen. But what have we got now? We've got a perfect stop today on the 200, meaning that traders were looking for a technical reason to buy at the end of the day. Now we said that the indices that were not all that optimistic when the Dow showed that it had support on the cloud were the NASDAQ. The NASDAQ was not anywhere near any support point, where it's just gotten near to the 50. And we drew this green line because we said that if the market was going to continue dropping, where it would find its support is with the Chiku span on the top of these candles. And if you look over here, what do you see? You see the 50 moving average. So let's just move that up to here. The 50 moving average, and tomorrow is Thursday, Friday, and Monday. You get Monday with sort of a flattening moving average and the top of that candle, and we should be seeing some kind of an oversold bounce right here. That would be Monday. Now we could see one sooner. We could see it tomorrow. If we saw the market go all the way down to the top of this candle, which would be below the 50, and then we'd get our bounce. But we're going to look at the combination of the Chiku span on the top of a candle, which would be Monday, or the 50 moving average. And then our last index is the S&P. And the S&P is showing that its next support level after having dropped the 50, because we saw it when we looked at it the last time, which would have been Friday. We were not down at the 50, so we said that's too tempting. The market is not going to bounce when it's that close to the 50. It's going to go and it's going to test the 50. Well, it bounced on Monday. It tested and lost the 50 on Tuesday, and it majorly lost it today. So where are we looking at next? Well, we're looking at right here. Tomorrow would be, support would be right on the top of the cloud. After that, we look into next week where we get support on the 50. And where will that be? At the top of the cloud. So where might that be? It might be tomorrow where we get support at the top of the cloud. And the Chiku span, top of the cloud here. So those two are just too convenient to ignore, that we would think that we're going to test both of those areas tomorrow and see some kind of support. Remember, we're deeply oversold on the McClellan oscillator. Just to look at some of our stocks, Apple continues to be strong despite everything else. Caterpillar is taking a beating and will continue to drop. Neo, Sava, these are stocks that, they're not expensive, so you hold them and you're looking for something in the long term just don't be too heavily invested in them. But I'm holding Sava, but I still have the short December 45 calls, and I've had them since October, and it's looking not so bad. I mean, I sold those calls for $14, so that's $1,400 per contract, and those are looking pretty good. Now, Square is the big disappointment. Square, who changed their name today to Block. Let's see what that might mean for the stock. But let's take out the Ichimoku and let's see. We've got a 38.2, which would be this double top down to the COVID bottom. We've lost the 50 and the 200. Now, what's dangerous is that the 50 may be doing a death cross over the 200, and we might see Square really get pummeled. I continue to sell calls, but what I have now is it's called a rescue call spread, where if you have, let's say, 200 shares, you buy 2 calls that are at the money or sort of in the money, and you sell 4 calls that are out of the money. So in my case, it was buying 2 200s and selling 4 205s, and I collected a credit for that. Now I'll lose my stock if it goes back to 205, but right now it's at 195. If it stays below 205, I keep my stock, and I keep the credit made from selling 2 calls, buying 2 calls, but selling 4 calls. If you have any questions about how that works, it's all legal in your IRAs, your your IRAs, your 401ks. You can do that with virtually no impact on your margin. So where are we going? Certainly the McClellan shows that we need a bounce. The Dow Jones says we could have a bounce. The NASDAQ says we are close to a bounce, but it might be a few more days, might be tomorrow. The S&P, however, might be a few more days, but between now and Monday, we should see a fairly healthy bounce, barring any additional bad news, and that bad news would come from more constraints regarding COVID, which is hitting Europe pretty hard right now. And whatever hits Europe, eventually comes to us. We don't have a wall around the United States. It's not like trying to stop immigrants crawling across the border.